Unit 1. Calculating and reporting different taxes. In this section, the participants acquaint themselves with the theoretical framework of the tax system in the Republic of Croatia, and the way of calculating and reporting different taxes. After reading this unit, you will be able to become familiar with the concepts of profit tax, income tax and value-added tax. Get to know the foundation institutes of the taxation system of the Republic of Croatia. Accounting tracks the business process and takes place in compliance with accounting standards by applying the legal regulations of a particular country. Below you will find more details on the issues of certain tax regulations in the Republic of Croatia and their application in the system of accounting of entrepreneurs, through the following parts. The fundamental features of the Croatian tax system. Profit tax. Income tax. Transfer of taxpayers to income tax inside the profit tax system. Value-added tax. The Croatian tax system is based on a system of direct and indirect taxation. Direct taxes are the income of the state that an individual pays personally or for which the employer has paid. Taxes are calculated as a certain percentage of the realized income or assets, and in Croatia there are profit tax, income tax and surtax on income tax. Indirect taxes are those taxes where the tax burden of taxpayers through the price of a product or service is borne by the end user, and in Croatia there is value-added tax, excise and real estate tax. Taxes represent the revenue of a budget and are settled for the purpose of settling the public expenditure envisaged by the budget. Pursuant to the Constitution of the Republic of Croatia, it is the obligation of each individual to participate in settling public expenditure in accordance with their own economic capacity. The general tax law categorizes public duties on taxes and other public revenues that include duties, the form of tax charged on the import of goods or services, fees, money for the use of a certain public good or payment of a particular act, contributions, giving for the purpose of using certain services for the exercise of certain rights, concession fees, fines for tax misdemeanors, and all allowances, the determination, collection and/or supervision of which fall under special regulations, and within the remit of the tax authority. The Profit Tax Act and the Profit Tax Ordinance are the underlying regulations governing the issue of profit tax. From the balance sheet perspective, profits represent the difference between equity before taxation at the end and at the beginning of the period. Likewise, profits can also be defined from the perspective of profit and loss of an account, as the positive difference between realized income and expenses in the accounting period. Profit tax is a tax on a base that is the difference between income and expenses. In English, terminology is called corporation income tax. The difference in income and expenses or gain realized in the accounting period is the basis of profit tax. The taxpayer is a tax-paying company or other legal and natural person residing in the Republic of Croatia who carries out the economic activity on an autonomous and permanent basis and for the purpose of obtaining profit, income or revenue or other economic assessable benefits. Profit tax. Profit tax is payable 1. 12% if income tax amounted to 3 million kuna in the tax period, or 2. 18% if income realized in the tax period is equal to or greater than 3,000,001 kuna. From the tax perspective, profit before tax, or gross profit, is the tax base increased for previously non-deductible expenses and reduced for deductions and relief, in accordance with the provisions of the Profit Tax Act. Thus, between the accounting results of the financial results from the point of view of tax regulations, which is the tax base, there are some differences that are reflected in revenues and expenditures, and may have the characteristics of permanent and temporary differences. An entrepreneur who is in the system of profit tax is obliged to manage his business books and to compile reports in accordance with the regulations on accounting of entrepreneurs, which implies the application of the principle of dual bookkeeping. The tax period is usually a calendar year, although at the request of a taxpayer another tax period of up to 12 months can be determined. Income tax is determined at the rate of 18% on the tax base, which is the accounting profit determined on the basis of data from the business books of the trading company and the financial statements prepared in accordance with the accounting regulations, corrected for the prescribed deductions and increases. Permanent differences in expenditures arise from accounting expense that is permanently tax deductible and thus increases the accounting profit or tax base. Permanent differences from the point of view of revenue are most often the result of incorporating into income amounts already taxed, such as dividends and profit share. A taxpayer is obliged to provide all necessary information on income and expenditure with permanent differences in accounting. Temporary differences, on the other hand, arise in one or more periods and are abolished in one or more periods. In this case, the tax effects of temporary differences are recognized as an item of property, deferred tax assets, or as a liability item, deferred tax liabilities. Pursuant to the provisions of the law, the taxpayer is a company or other legal and natural person who carries out the economic activity independently and permanently for the purpose of gaining benefits, and is a resident of Croatia, as well as a domestic business unit of a foreign enterprise. A taxpayer is a trade that earns income from self-employment. If more than one physical person jointly generates income, the taxpayer calculates separately for each person's share of the common income. Income from business, as determined by business books, is the difference between business receipts and business expenses arising in the same tax period. Receipts and expenditures are determined according to their market value, according to the principle of cash receipts. Receipts are determined after payments received and after expenditure payments have been made. The trade shall submit the application to the taxpayer's register at the competent tax authority at the place of his residence or habitual residence within 8 days from the beginning and the end of the activity. The monthly income tax advance is determined by the tax administration by a decision. A craftsman who starts working independently does not pay advances of income tax until the first annual tax return has been filed. The taxable income tax base makes income from trades reduced by the transferred loss and personal deduction. Income tax is paid on the tax base at rates of 24% and 36%. The craftsman can use various incentives and deductions, employment incentives, state support for education and training, research and development incentives and tax incentives for performing activities in assisted areas and the area of the city of Vukovar. A taxpayer is a trade which earns income from the self-employed activity of the trade, in accordance with the craftsmanship regulations, and which meets all of these conditions. 1. The total income in the previous year is not higher than kuna 300,000 with the mentioned limit of kuna 300,000 related to the amount of receipts that the payer can earn in 2017. 2. If the trade's earnings are below kuna 300,000 they are excluded from VAT. A trade that begins to carry out a self-employed activity can choose how the income tax will be paid, and is obliged to report at the beginning of the activity to the competent tax administration office according to his residence or habitual residence within 8 days from the beginning of self-employment. A trade that carries out self-employment and income is determined on the basis of business books, and opts to pay the flat rate for tax, is obliged to submit a report to the authorized tax office of the tax administration by the end of the current year for the following year and not later than 15 days after the expiration of the current calendar year. The annual flat rate income is determined by a decision of the competent tax administration office according to the place of residence or habitual residence of the taxpayer, and is in effect until a new decision is made. By applying a tax rate of 12% to the annual income, which is also the annual tax base for determining the annual flat rate, the annual flat rate income tax is determined. The monthly flat rate income tax is determined by dividing the flat rate sum of the income tax into 12 months, or a number comparable with the months of the taxation period in which the taxpayer carries out an independent activity. Value-added tax is a modern form of taxation which has been in effect in Croatia since the 1st of January 1998 and regulated by the Value-Added Tax Act and the regulations on the Value-Added Tax Act. By virtue of its economic impact, the value-added tax is a tax on general consumption and is included in the turnover tax group. Value-added tax represents a surplus sales tax that is calculated at each stage of the production and sales cycle, only to the added value created at a particular stage. The added value is actually the difference between the value of selling of the produced goods and services, and the value of purchasing goods and services. Thus, value added is the value that the manufacturer adds to the inputs purchased to sell them later. Value-added tax is therefore taxed by the difference between the selling price and the purchasing value of the goods. For taxpayers who are in the VAT system, this tax is neutral, since the tax paid for the purchase is recognized as a deduction of the tax liability, while on the other hand, the difference in VAT is borne by the buyer, whereby the final buyer admits the entire tax burden. Pre-tax represents the amount of tax that is in the supplier's account and is paid to the supplier. However, this amount of tax also represents a tax liability towards the country of the supplier, while for the recipient of the invoice, customer in the VAT system, although increasing its debt to the supplier and represents a financial expense, it is actually the amount shown as an advance paid to the state. This means that in the billing period, the tax deduction decreases the VAT liability on the invoices issued for the delivered goods or services. VAT on input accounts is not included in the purchase value of the goods because it does not represent the cost of the purchase, but reduces the obligation for VAT in the accounting period. Therefore, this amount is allocated and specifically recorded as a tax on the entrepreneur in the VAT system. In this case, the final buyer pays the full sale price, including VAT. The taxpayer of VAT is 1. Any person who independently carries out any economic activity, irrespective of the purpose and performance of that activity. 2. Any person who occasionally delivers a new means of transport, ex-citizens and ministries. 3. In the territory of the Republic of Croatia, a taxpayer who does not have a head office, a business unit, a permanent residence or a habitual residence, and performs domestic deliveries of goods or services where place of taxation in the Republic of Croatia, unless the Croatian recipient of goods or services is paid by VAT. Taxpayers with head offices in the European Union may appoint a tax representative in the Republic of Croatia, while taxpayers with head offices outside the European Union must appoint a tax representative as a person who is required to pay VAT. 4. State authorities, state administration bodies, bodies and units of local and regional self-government, chambers and other bodies with public authority, if they carry out economic or other activities, as the non-taxation of these activities would lead to significant distortion of market competition. For taxpayers to enter or exit the VAT system, as of the 1st of January, 2018, a new threshold for the value of delivering goods and or services performed in the previous year, i.e. in 2017, has been applied. Entering or exiting the VAT system depends on whether the amount earned is greater or lesser than 300,000 kN. In accordance with Article 90, Paragraph 5 of the Law on Value-Added Tax, to enter the VAT system and to determine imported goods, 5, 13 and 25% of the taxable turnover is deducted from VAT, whereas the value of deliveries are exempted from VAT. It is about exemptions for exports, the provision of services on movable property, in connection with international transport, for certain deliveries that are related with export, diplomatic and consular missions etc. for certain mediation services. Transactions included in Article 40 Part 1, G, of the Law on VAT and real estate transactions, unless these transactions are ancillary, occasional. Taxes on tangible and intangible assets of a taxpayer's long-term assets, are not taken into account. The taxpayer, income and profit, should enter the VAT system by force of law if they made taxable deliveries of goods and services in excess of Kuna 300,000 in the previous year, irrespective of whether it was so charged, if they are paying VAT per invoice, and regardless of whether they have been operating for a whole year or just for a few months. Furthermore, when exiting from the VAT system, taxpayers should take care of the tax consequences, primarily the obligation to correct the purchase of purchased economic goods in the previous tax periods for which they used pre-taxation. Please note that the threshold of Kuna 300,000 applies to trade firms who do not need to start running business books if in the course of 2017 they exceed the delivery threshold, receipts over 300,000 kN, not of 230.000 kN. Income calculations in a company are carried out in accounting, therefore it is necessary to know the characteristics of different categories of income, the methods of calculation and the obligations of the entrepreneur towards the recipient of income and the state. Depending on the city or municipality where the entrepreneur has his or her habitual residence, there are different prescribed rates, and it is therefore desirable to check which tax rate is applicable to each company. When talking about investments, it is essential to know the tax benefits related to the profit tax. Considering the number of tax reliefs, it is well known that the relevant provisions of the Income Tax Act are in place.